Okay. What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, I'm going to show you 10 stocks to buy in the month of April 2026. These are all companies that I have been buying now for at least a couple months, and I think these are all great deals. Number one on my list is going to be Microsoft. I think everybody knows what Microsoft does. This stock has had a terrible year. It is now flat for the past year, and really, it was about the same price 2 years ago. So I mean, if you look at the numbers for this company, sure that people might think, oh, they have problems with OpenAI investment or, cash flows are going to be hurt, all this stuff. The point is, any sort of, impairment in cash flows or net income or whatever it is, it's going to be short term. This is not a new startup company that is, you know, just getting started and they don't know what they're doing. This is one of the most powerful companies in the world and one of the most diversified companies. So no matter what happens to this company in the short term, it's going to bounce back. And as you, again, the stock has been flat for 2 years. We're at a low point here. So this is a great price to get in at. That is number one. Number two on my list is going to be another stock with similar characteristics, and that is Amazon, another one of the most powerful companies in the world. As you can see, I also have a position in this, another stock that has been flat for the past year and is also trading pretty close to where it was at 2 years ago. So another one where they're investing heavily into data centers and AI infrastructure, and maybe that hurts their cash flows in the short term, but over the long term, it will pay off. And guess what? If it doesn't, if this turns out to be a not so successful ROI, then they can cut it. And when they cut it, guess what? They have a bunch of other businesses that they make money from, and their net income and cash flows will go back up to where they were before. So that's pick number two. I would think to me these are pretty like common sense investments, but to a lot of people out there, they still find things wrong with these companies. Number three on my list is going to be Uber. This one is a little bit different. I definitely would not call this, as having the same amount of power or diversification as a Microsoft or Amazon, but they do have a pretty nice moat with being the number one ride sharing platform in the country, possibly in the world. And so they have that infrastructure they have built out is going to be a huge moat when we're talking about, of course, there's this, incoming threat of self-driving cars, and you have Tesla and Rivian and Waymo and all these other things. And sure, that could be a concern if Uber does not make some smart investments, but they are making some smart investments and partnerships to combat that threat. So, for instance, you could book a Waymo on the Uber platform. It's things like that that are going to keep Uber in business and relevant. And so with the stock down now to once again about the same price it's been for the last 2 years, I think this is a good opportunity and a good price to make an investment in this because I don't think this is a company that's just going to fade away over the next couple of years because we might have self-driving Teslas and Waymos and all that stuff. The point is, it's their platform and it's the brand name that is already so established that that's almost impossible to replicate. So that's why I like Uber. Next up, we have number four. We have Meta Platforms. Now, this one is pretty close to an Amazon or Microsoft as far as characteristics go. I actually would rather be buying Microsoft and Amazon probably more than this one right now, just because the valuation could maybe get a little bit cheaper. But again, it is pretty close to where it was trading 2 years ago. I mean, the stocks, these Mag 7 stocks went up in 2025, but I think mainly just because they're announcing their large capex investments into AI infrastructure, that's going to hurt their cash flows once again in the short term, and they could cut it. Look what Meta did with the metaverse thing a couple years ago. They invested what, $90 billion or something into that. It wasn't working out. They cut it, and guess what? Now they still have the same business that they normally have with ads, and that's going to continue to grow like it always has. So not I don't have a huge concern with Meta. As you can see, my position's not as big, once again, because I think Amazon and Microsoft are slightly more attractive. But I'm not that concerned with their investment into AI. Next up, we have Intuit. Now, this is one more so that's just got caught up in the, you know, SaaS apocalypse thing and the threat that Anthropic posed to a lot of these software stocks. I have a pretty large position in this. And that's just because I had to keep averaging down basically because this stock was at a 5 year low and I don't see it staying there. I see this stock going back up. Intuit already is implementing AI into their platforms. And once again, it's the trust of the company. It's the amount of members they already have on there. It's the data that's already into those logged into those platforms. Those are just a moat. It's just a moat that you're not just going to turn not everyone's you're not just going to have everybody turn that off one day and just start using Anthropic to replace all the software. So I don't think that's realistic. Um, then we move over to Oracle. This one is kind of similar to like a Microsoft or Amazon where they're just investing they're going to have a large capex spend the next couple of years. And the other amazing thing with this one is the cloud backlog that they have right now. So they have what 450 or 500 billion, yeah, over 550 billion dollars in cloud backlog. And so, if that when that converts to revenue over these next couple of years, I mean, it's going to be huge. I mean, this is a company with a very large moat, and again, it's their cash flows can be impaired in the short term, just like the other Mag 7 stocks, but I don't see it staying there. And I mean, when it's trading at the same price it was trading at years ago. So to me, this looks like a good risk to reward investment. Then we get to Visa. This one is a lot different. This one is, um, I see this as a much lower volatility stock. But the stock is down big from where it was last summer. 375 last summer. Now we're down to 300. So I see this as a safer bet and less volatile. I don't think anything terrible is going to happen to Visa or MasterCard anytime soon, so I'm not too concerned with that one. Next up, ServiceNow, pretty similar to Intuit as it just got hit with the other software companies. The valuation is near a 5 year low, which is just insane. And again, it's just about the customers that are already on the platform, the data that this company already has, and there's switching costs. Are you going to trust Anthropic to do all these complex uh, you know, run your company with all these different agents or whatever, the AI agents. I don't think that's realistic. I don't see that happening. So I think these companies like ServiceNow and Oracle and Salesforce, I think those are still going to be doing just fine, especially if they're implementing AI. It's not like they're falling behind. So that is pick number 8. Pick number 9 is in a totally different sector, and that is going to be Chipotle. Now, this one, you might be wondering, why am I picking this? Well, not only do I love Chipotle's food, I love how quick it is, especially now, to just go through the drive-through. I hit a button on the app, 10 minutes later, go through the drive-through, the food's ready, and it's quick and easy. It's healthier than most options out there, and it's not that expensive. So this stock is, once again, it's close to a 5 year low now. And I understand why the valuation came down. The growth definitely slowed. There's definitely more competition, but they also are adding a lot more stores for one, so that's going to help with growth. They right in the last year or so, I would say the economy's been in a weird place where maybe people are not spending as much money on things like this, but I think that's going to turn around at some point. So I'm happy buying, Chipotle in the 30s. I don't think that's a bad deal at all, and I don't is it possible that people stop going here and this company just their earnings goes down and stuff? I mean, maybe, but I don't know. I'm willing to take a chance with this one. They have a lot of new innovative technology coming with, robots to make their guacamole and make the burritos and all this stuff. So I can't wait to see what happens with that. But personally, I'm willing to take a chance with this one. Last up on my list, one of the most interesting picks is NIO. NIO is a Chinese EV company, and the main thing with them, the main reason you want to own this stock is for their battery swapping technology. They are by far number one with over, I want to say, a million or 10 million swaps or something crazy. And I want to say they have close to 4,000 battery swap stations in China. So with the patents they own on the battery swapping, and again, this stock is trading at close to a 5 year low. To me, it's well worth the risk to reward here. So those are my top 10 stock picks. Let me know what you guys think down below, and I will see you in the next video.